Good morning. It is a Wednesday morning and a beautiful day. You see the sun coming up over my shoulder. My name is Ryan McGough with Intellicom Investments, LLC, real estate investing, bodybuilding, business. They call me, or I call myself, whatever you want to say, the bodybuilding businessman and investor on behalf of my company Intellicom and Telecom Investments, two companies, and bodybuilding. And today I'm talking about investing, and I'm super excited to be here and tell you about some of these things that I've just been thinking about, taking into consideration how to best serve you, the investor, or anybody with a retirement fund could totally just put their capital from their retirement fund that might even be sitting there already into something that I'm super pumped and excited about. So please like and subscribe. Please share this video. I think I have done something and I'm doing something that nobody else is doing. And it's literally just for you, the investor, or you, the person with $1 million sitting in your retirement fund and not collecting 30%, which is what I'm going to show you how I can get you for investing into this real estate property that I have here. So I'm going to show you here. This is the investing package. Oops, forgot to switch the right one. This is the investing package. So the idea is, how do we come up with a better package for our investors? How can we bring something to the table that even gives them maybe more than it gives me, right? The investor. And all they have to do is just allowably and safely transfer and move their money from a 401k, IRA, something of that nature. And I've structured something intelligently and strategically to minimize capital gains, to minimize risk, right? To also give a huge return in monthly cash flow, as well as equity split, right? And even to hit that other very important, valuable one, which is depreciation, right? To claim something to offset taxes. And I've given all of those things to you, the investor. So it's like Tony Robbins said, create a package that people cannot even choose to say no to, because it's just so valuable for them. So I really wanted to show you. I'm super excited. Just want to hit just a few minutes of your time here today, because it doesn't take very long to check this deal out here. So we have a fix and flip to rent proposal. This is the address here. We have it under contract. We're closing next month, right? And so what I mean is, if you have that capital sitting in your retirement fund or not, or you're just an investor, you invest in the property and the renovations. We do the renovations ourselves, so it benefits me to keep my company moving, doing renovations, managing new projects, keeping our construction team packed and full. And it also lets us take a house that is super low priced, and you could see, because here's the Chesapeake Beach, it's the average price in the area, and that has gone up since 2019. So it's super growth area, right? If you know the DC metro area, it's very growth oriented. It's not a surprise. I remember looking at houses here when we bought our house 5-6 years ago, and these were very much $200,000 to $300,000 houses. Now they are very much $500,000 to $600,000 houses, and we would get one for a $20,000 decrease from what the market says, because it needs a little work and the market has slowed a little bit. So what we're doing and why it's so important is because I mentioned I'm hitting all of the tax benefits, right? Your retirement fund purchases the whole house, right? It does. And so now you're bonded and insured on this investment, right? It's your property. We manage it, but basically you have purchased it. So there's very low risk in that. You own the asset. It's never going to go to zero. You're insured on it, named as insured. So it would never decrease from what it is insured with, the value at least. So, and what I meant and what I said was, purchasing the house, we do the renovation, right? We're going to manage the rental. Now, something beautiful about this house and why I picked this house is because it is 2 units. If you can see here, there's a garage down there. There's actually kitchen, 1 bed and 1 bath unit on the bottom that we'll rent out, as well as the 3 beds, 2 baths on the top. Sorry, 4 beds, 2 baths on the top. So that is what is going on here. We have 2 separate units. We're going to manage it, and we are actually going to pay you 50% equity when we sell or refinance the property. We're estimating at a very low percentage to say that this house will be worth $70,000, right? I get 35, you get 35 on the exit. And also the cash flow that you get, which is $2,500 per month. So $90,000 over 3 years. This is a 3-year investment. You put your capital in of $460. You're licensed or you're bonded. You're insured on the property. Very low risk. We've renovated it, so it's already worth around $600K. We're saying that the market will increase in the next 3 years, just like it has, right, in the last 3 years. Maybe not at the rate. You could say the market's going to slow, but we're pretty sure that this area is going to increase in value. We know that it has, and it will continue to. So you're on the equity stake of it. We've boosted its value. It's worth more already, right? And we're just going to manage it by renting it out. We're going to pay you $2,500 a month, which is $90,000 over 3 years, right? So it's hugely beneficial. You get a monthly. I'm going to rent it out. It has 2 units. I don't know why this is choosing to do that, but let's just stay in this screen. It really wants to keep me moving through it. I guess I'm taking too long. And I have a meeting to get to too. But so the point is $125,000 on a 460 return. But since you're getting it in cash flow, you're not being taxed on any of the monthlies, right? Even that equity stake really still kind of comes in at a very low number instead of just being taxed on $125,000, right? At the end of it, you're not taxed on these 90,000, and then the 35 has a much lower tax bracket on your capital gains at the end of it, and it still kind of squeaks in right there at that, under a huge capital gains tax percent and rate. So literally how I've structured this, what I'm doing with this is totally just to give you the money in the best and most opportunistic way to also let you seamlessly use your retirement fund to low risk buy an asset that's in a class A area. And everything that I've done here to structure is just to make it the stupidest deal to turn down, right? Because what else are you making 125 on your 460 in 3 years? Now, why would I do that? Because I'm going to manage the property. I'm going to make the equity in it. We're going to split it at the end, and I don't have to pay fees on fees on fees to go buy this from a bank and pay a 20% down payment and have this low cash on cash return that's coming back to me in 3 years. I literally allow you to use your retirement fund to be the bank, and I update this property and manage it, right? And it's 2 units. So you get 2,500 and I probably will get 1,000, 1,500, maybe more. However, I want to rent these 2 units out and manage those will be how we do it. But also, since we do the construction of it, we get our construction team and everybody moving through the process, through the building. And that keeps our construction company alive and well. So it just has all these implications where it's super valuable to me. And then I exit you out in, 1 to 3 years, whatever your term is. If you want the full 3, I exit you out then with a refinance and what the house is worth. Then we estimate you and myself get the $35,000 each, and you're exited out of the deal with all of your money back into your retirement fund without penalties, and also then collecting your return monthly plus at the end of it too. So I just wanted to share that. I'm super excited, right? It's a beautiful Calvert County, Maryland, a nice area, 4 beds, 3 baths, 4,000 square feet, a living space at the bottom. Rents in the area 3,600. Plus, I said we have that bottom part there that probably rents for 1,000 too. It's for sale for 450, I think it was, and we got in at 430. So we've already got it at a discount. Comps in the area, see this beautiful house, 675 for a 4 and 4, and that is right down the street as well. And the rehab, we're going to patch and paint the entire house. We're going to paint the brick outside. We'll eventually do the siding, so this will be a totally white, but it'll be white painted brick like that. And then the top, we have two-car garage. I mean, everything, and in suite or separate apartment in case we wanted to house hack it. Live in one side of it, rent the other side out. There's always that capability too. People like that stuff now. Repairing the whole deck, restaining it, flooring throughout the house where it doesn't have nice tile. All the kitchen, 2 kitchen updates, backsplash, paint the cabinets, new lighting, and then 3 updated bathrooms with new fixtures, tile, and all that. And this thing is easily worth $600,000 when it's done. So instant equity, we do the work, and that depreciation I was talking about, because you can claim a rental as soon as it goes in. We have a 1 to 2 month renovation, and bam, you are collecting cash flow, and you can already appreciate it because we will have renters and tenants inside. So this is exactly what I'm doing with another deal that's an Airbnb. The same structure, right? The same 50%, the same, it's a cheaper house. It is a mountain Airbnb. We can do the same thing because I Airbnb it, take that off of your stress. You don't have to worry about any kind of managing rentals, anything like that. You sit back, collect cash flow. I literally do all the work. Again, we have a renter in very quickly. We hit the winter months, which, as I come with today, it is the 18th of October, and we would hope to be in by the end of November, which is the perfect skiing time. This area has a 1-year change of 16% growth. And as you could see, it's a very steady upward swing as well. And we have a very high priced house in here, and it is basically on the lot down at the bottom by Snowshoe, which I love the resort of Snowshoe. And there's some nice, beautiful rental comps out here that are off the mountain, and you could see winter 900, 275 in the fall. Even summer's 400 and spring is 275. So these are some comps in the area that we went. We love it. This is what the mountain looks like. That's the wife and kids out there. Beautiful views. I mean, you're literally at the bottom of this mountain. All you got to do is drive up. And again, this thing is just like the other one where it is, you see the back, this is a separate unit. So we're going to create a stairway that goes from the bottom to the top so you can rent the whole thing out. Or we have 2 separate Airbnbs, get a nice jacuzzi out there on the side. We're upgrading the whole outside, a new roof. And then the inside's good. We're just going to redo some floor and just, paint, stain where needed. But you can see the bathrooms need a good amount of updating too. So that is what I wanted to share with you. I think we have a super valuable thing here, and really how we're structuring some of these like Class A luxury houses, and how we're trying to partner and just give somebody a huge deal on them, and like make it so it's a super valuable way to invest and takes minimal effort and risk on your part. So that's what we're doing at Telecom Investments. Thanks again. Like, subscribe, share, and I appreciate your time. Thanks, everybody.